invested in you.
Dow Jones Industrial Average pretty close to intraday high. It was up about 680 just moments ago. But again, it's good news on the Omicron variant not being as bad as we thought in terms of the way it affects people. Not one death yet known about. It may be happening somewhere, but so far the World Health Organization says they can't record a single death from the Omicron variant. But the bottom line is it's much less severe in actuality and the way it plays out if you get sick than other variants have been. It may also have to do with the fact that so many people are vaccinated. Meanwhile, oil prices are surging today and concern over demand lingering as the World Petroleum Congress gets underway in the United States this week. Lydia Hu is in Houston with the very latest on that. Hi, Lydia.
Hi, David. Yeah, it's the first time in more than 30 years that the Congress is returning to the United States. This is an opportunity for some of oil and gas's industries, biggest names and brains to get together to talk about some big picture questions like energy transition and how much longer the world will need oil and how much. Sure to be discussed over this week will be the huge swings in the oil and gas market that we've seen during the pandemic, from the massive surpluses and plunging prices to the shortages and surging prices. You can take a look at this. Crude oil prices crashed to a negative $37 a barrel in April 2020, only to surge a year and a half later to $80 a barrel. The price has come down in recent days, around $66 a barrel now, but as you say, surging again today. But gas prices remain high. $3.36 is the national average price for a gallon, almost 56% higher than a year ago. Just a little while ago today, David, I had a chance to ask ExxonMobil CEO Darren Woods about the price that Americans are paying at the pump and when he expects that to improve. He says they are expecting more volatility in this market moving forward in the short term, but he sees pricing conditions improving for Americans next year. Watch.
As we move into the back half of this year, or the back end of this year, and then move into 2022, that you'll see better balances, more supply equal to demand, and that in turn will help with pricing and I think take some of the pressure that some of the families that we're seeing in the U.S. feel.
Now, as for Omicron's impact on the oil and gas market, Mr. Woods characterized the initial reaction as extreme. He says as we learn more about this variant and rely on vaccinations, he's confident that oil and gas will be able to navigate this Omicron variant moving forward. But to really understand the hurdles that this new variant presents, you really need not look forward, look beyond the Congress, where we are right now. While it is still expected to draw several thousand people over this week, just over the weekend it was announced that energy ministers from 8 countries dropped out of the conference, as well as a few oil executives, over rising concerns, not about the Omicron variant itself, David, but about the travel restrictions that are being implemented, concerns about being stuck here in the United States, keeping those energy ministers at home.
That's
Back
incredible.
to you.
That's incredible. Lydia, thank you very much. Appreciate it. So oil is on the rise, at least for the moment, on hopes of a milder Omicron variant. Joining us now is Agora financial market strategist Alan Nuckman. Alan, great to see you. It's been a long time. Thank you for coming in.
Hi, David.
I got to ask whether it's demand or supply on the long term that investors are focused on, because clearly today's pop was as a result of the demand surge. We're going to have greater demand since the Omicron is not as bad as we thought. But what about the decrease in supply? The president has talked about that. President Biden mentioned that we need more supply. Is that the major concern?
Well, I'm a trader, and I just look at price. Price is my major focus, and crude oil prices have been traded between 45 and 85 over the last year, so 65 is an important midpoint to keep an eye on, and we're right back above that right now. I think things got overdone to the downside. Like you said, initially people had more concern about this new variant, and the assumptions made in the crude oil price from a demand standpoint weren't realistic from this drop, this major drop from the top. But let's remember, $80 crude is still not that expensive. It was around the $80 level from 2007 to 2014 and again in 2016. So yes, we pulled back, but I still am very positive on the macro market, and I think crude oil is a barometer of the economy, and I think it could come back just as stocks are coming back.
Now, I don't want to draw you into politics because I know you stay clear of that, but the fact is that it stopped becoming expensive in 2016 does coincide with the election of President Trump, who actually had a very bullish policy in terms of creating more supply in the United States. We became energy independent. How much did our energy independence have to do with the price of oil falling to these lows that we became accustomed to?
Well, as I look at it, a lot of it was the lack of investment by the private sector. The private sector stopped investing because they kind of got burned the last couple of times, and it takes some time to catch up. Now, let's talk about gas prices because that's what we're looking at when we talk about crude oil. Gas prices have held even though the markets have gone, dramatically lower. So, hey, that's the way it works, unfortunately, because the pipeline of being able to get the trucks to the gas stations, none of that's changed, even though it's much cheaper. It's still a tough road, so to speak. But no one likes paying higher gas prices, but I look at it as a positive, meaning the economy is booming back. And so there are analysts talking about $150 crude. Right now, we're way below the halfway point of where we were in 2008. So there's still more upside from an investment standpoint. And just to put a positive spin on this, if you take the 1950 price of gasoline and adjust it for inflation, that brings it to $2.85. We're at $3.35 right now. So it's not dramatically different. I know everybody hates to see those prices at the gas station, but if your wages are rising and there's less jobs, the stock market's at highs, and interest rates are at lows, there's a lot of positives.
I understand, and I didn't want to get into politics, but inflation is cutting into those wage hikes dramatically, and I got to tell you, naturally, it's not just petrol, it's also natural gas, and we're going to have